Bismillah ar-Rahman ar-Rahim. Can everyone hear me loud enough? Okay, Jazakumullahu khairan, Mufti Saab, for your comments, for your introduction. Jazakallahu khairan, Sheikh, for allowing us to be here at this masjid in front of this community so that we can basically discuss what our offering is. But I don't like to focus on our products. I like this to be an educational and informational session with respect to identifying the difference between bay', as Mufti Saab had mentioned, and riba, which is impermissible in Islam. So without further ado, إن الحمد لله نحمده ونستعينه ونستغفره ونعوذ بالله من شرور أنفسنا ومن سيئات أعمالنا من يهده الله فلا مضل له ومن يضلل فلا هادي له وأشهد أن لا إله إلا الله وحده لا شريك له وأشهد أن محمدا عبده ورسوله. So I always like to introduce this topic respectfully with respect to the state of Canadian banking as it is today. And, throughout this journey, there has only been one type of banking system available to us in Canada, which is the conventional banking system, which is the banking system that we're used to, the one that we use every day. And in fact, there are actually not just Muslims, but non-Muslims that don't participate in banking in the most efficient and effective manner because there's a misalignment. There could be a misalignment with their deen. There could be a misalignment with their ethics, with their values, with the way they want to operate a financial lifestyle. And so, this statement that I have here goes beyond the Muslim population, because there's only 2 million Muslims in Canada, which represents about 5% of the Canadian population, but upwards of 10%, some people even say even 15% are considered underbanked, meaning they're only using banking minimally just to get by, or completely unbanked, right? They're just not part of the system, and they're in a cash-based society. And when we think about, the need, what we talk about for inclusive finance, there are actual economic consequences for not providing optionality, right? And optionality meaning you can have conventional banking and, halal banking. A lot of us, right, may have immigrated from Muslim countries, Muslim-denominated countries, that have had Islamic banking, right? So if you're from South Asia and you're in Pakistan, you may be familiar with Mizan Bank. If you come from the UAE, maybe you're familiar with Dubai Islamic Bank and Abu Dhabi Islamic Bank and Emirates Islamic, or you from Saudi Arabia, Al-Rajhi Bank, and so on and so forth, right? In Canada, we have none, right? It's just very plain and simple. There has never been one. And so there are real economic consequences by creating or not creating optionality, because what does that do? It actually excludes us from participating in banking, and it actually excludes us from creating wealth within our community, right? I always like to emphasize just a bit on this intro because I want everyone to understand where the efforts of the Muslim community have gone, right? And when it comes to Islamic institutions, alhamdulillah, we have masajids like this. We have a lot of Islamic schools. We have community centers. We've done a very good job in that category. Another category that we've done really well is also in the halal food industry, right? Or in the halal meat industry. There's no shortage of accessing halal meat in restaurants that are Muslim owned, even restaurants that are non-Muslim owned, okay? And this was a juhud or an ijtihad over the last 40 years since I've been here in Canada to see that, halal meat is now readily available, has become mainstream, alhamdulillah. The effort stopped when it comes to Islamic finance or halal banking. And I tell people, if there was efforts from 40 years ago to today, the same effort and the same, focus, then maybe today we would have had an Islamic bank, right? And when you think about the loss, and I look at it as a true loss, the loss of economic growth within the Muslim community over the last 40 years, it is very much detrimental. And this has not allowed us to participate in Canadian society as much as we'd like to. Why? Because if we had Islamic banking, let's say 40 years ago, maybe more people would have participated in home ownership. Maybe more people would have participated in investing in the stock market. Our wealth would have grown. And when you grow your wealth, what happens as well? You grow your zakat, right? And maybe we would have had stronger charitable organizations and stronger Islamic institutions and a stronger participation in the Canadian economy. And so a lot of that has been hindered due to the fact that Islamic or halal banking has not been accessible. And so when we think about the history of Islamic finance, right, fast forward to today, it's about a $5 or $6 trillion industry. Now, anytime you put a T in front of a number, a trillion, everyone's like, wow, mashallah, that's amazing, that's huge. But let's compare this actually to the conventional banking system. The conventional banking system today is actually $600 trillion. So this 6 trillion only represents 1% of the actual banking assets, okay? And when you think about the position of equity of that 600 trillion versus the debt of that 600 trillion, it's actually a 10-to-1 ratio, meaning 60 trillion of the 600 trillion is actually real hard assets, equity, cash, property, right? Versus 540 trillion, which is actually what? Debt, right? Or impermissible instruments that have riba as an underlying kind of mechanism of profit. And so the reason why we are in this kind of economic, dire economic situation is due to all of the debt that's in the system. And we saw this debt pop in 2008 during the financial crisis. And so let's strip out the debt, right? Because I tell people, I say, well, there's 2 billion Muslims in the world. 2 out of 8 is 25%. Shouldn't at least the 600 trillion, we have a representation of 25% of those dollars? That would be a fair assessment, but it's not. It's 1%. So let's remove the debt. And let's just say, okay, let's say assets to assets, because all of the Islamic assets globally are, or the value are asset backed or asset based, right? There's real value behind those assets. So 6 trillion versus 60 trillion. Now we have a ratio of 1 to 10, about 10%, right? Which is closer to the 25%, which is a much more palatable number to get there, right? And so this is what we have to focus on is not a debt-based system, but an asset-backed or asset-based system. And we're going to go through that in detail. Next slide, please. And so when we think about, what is Islamic finance? What does it actually represent? Okay? And in its very basic form, if we just take the definition of what finance is, right? Finance represents the management of money. It represents the process of acquiring funds. It also encompasses the oversight, the creation and the study and banking and credit and investments, assets, liabilities, everything that we see today. This is what the financial system is made of. And that is what we can say is what the conventional banking system is made of. Now, what's the difference between that and Islamic finance or halal banking? It would be, right, that it creates a framework on top of that aligns with the dictates of the Sharia, right? So you take this system and then you say, okay, I'm going to add a layer of rules on top of that based on the Quran and the Sunnah. Now I have what we call as Islamic finance. Next slide, please. And so it ends up being rules-based, has philosophical rationales and underpinning wisdoms, right? It's coming from divine, right? Divine creed, which is from Allah subhanahu wa ta'ala. And it's not just a spiritual exercise, right? Islamic finance is not only good for the dunya, but as we know, it's also good for the akhirah. Alhamdulillah. And it's beneficial for all. It's not just for Muslims, it's also for non-Muslims. No different than when you eat a shawarma. Muslims and non-Muslims like it. Why? Because it's flavorful and the meat is halal. They may not care that the meat is halal, but they care about the flavor, and that's the reason why they buy it. The best example I give people when it comes to non-Muslims banking with an Islamic bank is if we go to the UK, London, UK, and there's a bank called Al Rayan Bank. which what used to be called the British Islamic Bank. This is the largest Islamic bank in the UK. Upwards of 40% of their clientele are non-Muslim. Subhanallah. 40%. And when you actually survey them and say, why did you participate in an Islamic bank? It has nothing to do with religion. It has everything to do with they were transparent, they were ethical, they were equitable, they were fair. Maybe the pricing was better, maybe the product was better. They gave it to me, the other bank didn't give it to me. These are all the reasons that they use it for. And so there's nothing stopping us as a community from not only creating an Islamic bank or creating a financial system outside of the current financial system, but also allowing for non-Muslims to participate in it as well. So there's a couple of ahadith that I want to have put your attention on. And one is from Imam al-Ghazali, okay? Because what we need to understand in Islamic finance is the concept of money and how money is actually treated, right? Money in Islam is treated as a commodity. It's a means to an end, meaning it's used to acquire assets, okay? And this is part of the trade versus riba discussion. And so Imam al-Ghazali states that Allah subhanahu wa ta'ala created the dinar and the dirham to be circulated and be an equitable and just standard between different assets. Does anyone here know what the dinar was backed by? What was it made of? Gold, yes. And the dirham was made of silver, okay. Now, did one dinar equal one dirham? No. Thank you. How many dirhams equaled one dinar? If I had one dinar, how many dirhams could I exchange that for? 20. So that was the ratio. That was the standard, right? A standard between different assets. So when we think about riba and the concept of riba, I can't come to you and say, for my dinar, you have to give me 25 dirhams. That doesn't work. Why? Because we know that 1 to 1, 1 dinar equals 20 dirhams, and 1 dinar equals 1 dinar, and 20 dirhams equals 20 dirhams. I can't say, I'm going to give you my shiny 1 dinar, and you give me 2 non-shiny dinars in exchange. That's riba. That is the concept of riba. And it doesn't just it's not exclusively just for dinars and dirhams. It actually is beyond that. So it's assets that are like for like. Okay? So if I had, and there's a hadith as well, if I had 1 kilogram of dates, I can't exchange that for your 2 kilograms of dates. Even if mine are fresher and yours are about to expire. This is a like for like transaction. So we have to understand this, right? This is the whole point when it comes to riba. As soon as the exchange is different, when both assets are the same, this is what is considered riba. Okay? And so Ibn al-Qayyim mentions that money should never be sought for itself. Rather, it is used as a means to gain commodities, right? This is the whole point of the concept of trade or tijara. When money begins to be treated as a commodity and becomes the objective of the transaction, the whole economic system becomes corrupted and in crisis. And this is what we see today. Right? And so again, money has to be treated to say, well, I have money. What am I going to do with it? I'm not going to get more money. I'm going to exchange it for something else. Next slide, please. And so what are the do's and don'ts of Islamic finance? Okay, because a lot of people are wondering and they ask, okay, so what can you do in Islamic finance? You can do a lot of things. There's only a few things that you can't do, and a lot of them we already know, right? So what you can do is finance or invest businesses that are positive for society and people. Okay? You want to invest in a halal restaurant? Go ahead. But you shouldn't be investing or financing anything that is harmful to society, whether it be morally, socially, financially, or spiritually. Meaning, can I go open up a cannabis shop? No. Should I go open up a casino? No. Should I go open up or invest in a liquor store? No. Should I go open up a pig farm? No. right? We know these, right? These are what we say is outside, right, of the bounds of Sharia that we're not allowed to participate in, whether it be investing in or financing it. Okay? An important piece when it comes to Islamic finance is ensuring that there is an asset behind the financing for profit. And we're going to discuss some of these examples later on. And the only time that you can actually get into a loan or a qard is through a social contract, which is qard hasan, as we know, which is I give you $1 and you give me $1 back, or I give you $100,000 and you give me $100,000 back. It can't be 101 or 110, right? The only time that you can enter into a debt-based agreement or what we would consider as a loan is a qard hasan. That is it. Anything outside of that is either in the realm of permissible or impermissible, whether it's either designated as trade or riba. And your capital must be at risk, right? This is part of the sharing, right? Right? The sharing and the transparency and the equity, right? Are we participating in that risk together in some way, shape, or form, temporarily or long-term vis-a-vis a partnership? And so a lot of times brothers and sisters come to me and say, brother, this is just the same. You're replacing the word riba with profit, right? And you're trying to fool the community. And subhanallah, Allah subhanahu wa ta'ala told us this in the Quran 1400 years ago, right? And Mufti Saab had mentioned it, right? In Surah Al-Baqarah, there's an ayah that says, وَحَلَّلَ اللَّهُ الْبِيعَ وَحَرَّمُ الرِّبَى. Allah subhanahu wa ta'ala has allowed trade and forbidden riba. But people don't read what was said before that. What was said before that? That is because they say trade and usury are the same, right? They have conflated the two. This is what people are saying today. 1400 years, Allah subhanahu wa ta'ala told us, people are going to come to you and say, brother, interest and profit is the same. You're just, doing some magic. You're just switching the words around. You took a contract and you did control find and you erased the word interest and you replaced it with profit. That's what they think we did. But there is a distinct difference, and this is part of the education process, okay? And so when you think about riba, you're actually entering into an unjust enrichment, right? So you are making money unjustly. Why? Because you didn't participate equally in risk sharing. You didn't participate in something that had recourse or an asset behind that exchange of money, right? So when we think about riba, it is a system that is based on debt financing, right? And economic management, right? So if we go, it's also an unfair advantage in contracts, right? Like when you think about, if you take a loan from a bank, and let's say you miss a payment, what happens? The bank calls you, the bank knocks on your door and says, you missed a payment, you're now in default. I'm going to ruin your credit score. I'm going to sue you. I'm going to send you to the courts if you don't pay up. I'm going to send you to collections, and I'm going to continue to add interest, and I'm going to add legal fees and admin fees and all these other fees. Isn't this all unjust? Isn't this unfair? You only see it as fair because why? You're making your payments and they're not saying anything. But as soon as you stop making the payment, then the unfairness happens, right? And we are all blinded by this. Riba is a form, right, of income with a guarantee of one's capital. You can't do that. I can't say, here is $100 and I'm guaranteed 110 at the end of the year just because you wanted to use some money. I did not participate. There was no effort put in. And so when we differentiate that riba with profit, right? Profit is always based on a return, okay, and not from lending. We're not lending money. Islamic banks don't lend money. Islamic banks participate in asset-backed or asset-based transactions or financing agreements. We either invest or we finance. and we don't have borrowers, right? And we are not a lender. Okay, and then you're going to say, well, what's the difference between lender and finance? What's the difference between borrower and client? There's a big difference, because there are rights that have changed within that transaction, within that contract. Okay, and so in a profit-based mechanism, it means that the investor, i.e. the bank, or the trader, have taken investment risk, market risk, asset risk, right? Whereas interest risk is only the risk of the credit. I decide to give you $10,000 because your credit score is 750. And if your credit score is 600, then I don't want to lend you money. Well, this is just based on what? Based on you having some sort of credit history. You can't invest or trade based on that. You have to buy something. This is the reason why money needs to be in exchange, right, for these assets. Okay? And so in a profit-based mechanism, your capital was at risk. Interest, it's not at risk. Again, because it's debt, they say, okay, well then we're going to send it to collections and you have to pay us back. And if you don't pay us back, we're going to ruin you, pretty much. That is not the way to to get into a contract financially between a bank and a client, right? So what are the don'ts of Islamic finance, right? Everyone always has heard of the term riba. We've talked about riba. We beat the dead horse, as they like to call it, and I don't want to do it anymore. But there are other aspects of Islamic finance that need to be understood. Maisir, which is speculation. Gharar, uncertainty. Unjust enrichment or unfair exploitation, or unethical purposes. So let's skip riba. And because I've already spoken about it and everybody here understands the definition of riba, but let's better understand what does speculation mean, okay? Sharia prohibits and treats as void transactions that rely on chance or speculation, rather than, what did I mention before? Effort to produce a return, okay? And so let's have an example. Let's say two of us want to partner and invest in a restaurant, okay? And then another brother comes to us and says, hey, did you know that like within 3 years, on average, 50% of restaurants fail. And then in 5 years, 75% of restaurants fail. And within 7 years, 90% of restaurants fail. Well, okay, that's risk. That's not speculation, right? Because speculation would be, let's go to the casino and I'm going to drop $100 on red and, maybe it hits red and then I double my money. There's no effort there, right? Like it's just a guessing game, right? That's the difference. That's what speculation is. Effort, I can build a restaurant, I can put a good menu, I can hire the best chefs, I can, get really good pricing, I'm going to do really good marketing, and it may work and it may fail. But that's effort and that's absolutely fine. So don't confuse commercial risk with speculation, okay? And participating, right, in risk taking really forms a critical part of the Sharia documentation. This is critical, whether it's an investment or a financing transaction. When we go to uncertainty, okay, we need to be very clear in the contract what you are getting specifically, when you are getting it, and how much you're getting it for. If anyone here has studied law, they would understand that in any type of contract, subject matter, price, and time of delivery are absolutely certain, right, to form a valid contract. So for example, let's say I have a phone store and you come to me and you say, brother, I have $1,000. Give me a phone. And I say, okay, here's this phone. And I take your money. That is an invalid transaction. Why? Because you gave me money and I just gave you any phone. Versus, you would say, I have $1,000, what's available? I would say, okay, I have this iPhone 16 Pro Max, 128 gigs, blue color, brand new in the box, and I can deliver it today. You see the difference? There's zero gharar in that transaction. I'm showing it to you, I'm saying it's available, I'm telling you exactly the specifications that you're going to get for that $1,000. and that contract becomes valid, versus one that is speculative and you don't really know what you're going to end up getting. Okay? Even, you could be like, well, I've entered into a contract to receive, 10 tons of dates. Okay, what kind of dates? Are they, ripe? Are they non-ripe? When are you getting them? Oh, I don't know. When the season's ready, when they pick them. And so we have to be very, very specific when it comes to the contract. Unjust enrichment and unfair exploitation, right? So Sharia prohibits and treats any contract where one side is exploited like the other. So like I said, in the contract of a debt-based agreement with a bank, where you miss a payment and then the clock keeps ticking, they keep adding interest and they keep adding fees. This is all unjust. They are kicking you while you're down, is what we say. That is unfair and should be completely avoided. Lastly, unethical purposes. We talked about this. Everybody knows this, right? Don't invest or finance in weapons, in alcohol, in pornography or entertainment or gambling. All of these are sinful activities and hence sinful businesses, and hence immoral for society. Immoral for society. It is not good for society to have these types of businesses, right? It disrupts the youth. And it disrupts even the elder generation and moving forward, right? So there's no need to have these types of businesses. So this is the final part of the presentation. I'm just going to go over the main 3 types of transaction models. So here we have Murabaha, Bi' Salam, Istisna, and Ijara that are all asset-based structures. I'm going to go over Murabaha and Ijara because those are the 2 most common structures in the asset-based model. And then the second style is a risk-sharing structure of either Mudaraba and Musharaka. We're going to focus on Musharaka for the purposes of this presentation, wrap it up, and then we're going to open the floor to questions, inshallah. And so when we look at Murabaha, right? Actually, just go to the next slide where the image is because it's much easier. Yeah. So the way Manzil does it, and again, this is all under the context of home purchases, okay? You are a buyer and you find a seller in the market, okay? And the seller is selling at $500,000. You as the buyer agree to the $500,000 purchase price and you enter into agreement together to say, I'm going to buy this house for $500,000, and the seller agrees and you've signed the documentation. This contract needs to be assigned to Manzil. Why? Because we have to take ownership, right? We're not giving you money. So we agree that, okay, we accept this contract for $500,000 and we are going to finance this based on the Murabaha structure. So how does that work? So let's say you have to put a minimum 20% down. So you put $100,000 and we agree to finance the remaining $400,000. However, that's just the principal amount. What needs to happen is a buy and sell here, right? So we say to you, okay, we'll buy this house on your behalf for $500,000. However, over the next 25 years, you need to give us a payment of $2,500 a month that's fixed for the next 300 payments, which is equal to 25 years. So 2,500 times 300 payments, 750,000, right? And you say, okay, I agree. I'm going to give you $2,500 a month for the next 300 months. So now we sell it to you for $750,000. That's it. Very easy. This is a very pure, simple Murabaha transaction. But what did we do here? We had to acquire the home first, have it in our possession and ownership, and then we resold it to you at a higher price. Why? Because you don't have $500,000 of cash to pay for it up front. You asked for a payment plan. Okay? And so we embedded a profit based on the trading of this asset over to you. The next transaction is Ijara, and this is super, super easy. It's rent or leasing. Let's go to the diagram. And so again, if you have a home seller, what would happen is Manzil would buy the home. We would agree because we have to own it and we're going to lease it to you. So we're going to own the home, and then you enter into an Ijara agreement with us for whatever amount, let's say $2,500 a month, and we can agree to either say, okay, after 300 months, this is a rent to own, right, type of ownership transaction style. And at the end of 300 months, you can keep it. Or we say, you know what, or you say, no, I don't want to keep it. I'm just going to rent for 12 months or 24 months. And then we still have ownership and we find a new renter, right? No different than, leasing equipment, right? You borrow it, you pay for the use of it, right? But you're using the equipment and then you give it back, or, maybe you buy it out. There's a way to purchase it out and then you have ownership of it. But the ownership stays with the financier. This is the difference in Ijara. And then finally, in the Musharaka, again to the diagram, this is where we participate together. We become partners. So in the example of a home that is $500,000, let's say we decide to go 50-50. I put $250,000 as a financier and you put $250,000 as the homeowner. We now own 50% of the home together. However, we say we don't want to live in the home. You live in the home. You live in the home, you have ownership, you have title of the home, you can rent it out, you can renovate it, you can do as you please. And every month you're going to make a payment to us. Let's say that payment again is $2,500 a month. So every time you make a payment to us, we are selling our share to you. So if we're 50-50, we start, and after you make a payment, you go to 51, we go to 49. You go to 52, we go to 48. And then you go to 100 at some point in time, and we go to 0, and then this is it. This is what we call diminishing musharaka or musharaka mutanaqasa, right? So every payment that you make to us, we're selling our equity, our shares to you in exchange for, right, a mortgage payment that includes principal and profit up until the time that you have 100% and we have 0, and then we are no longer partners. That's how it works. It's very, very simple. So with that, I will end the session, and we can open it up to questions to the group, inshallah. Bismillah.